Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income stream. My name is Matt, and in today's video I'm going to go over the trades I execute for July 14th. I only run covered calls and cash secured puts, so let's get started. The first thing I like to show on my channel is my account value, more so just to get an idea of the account I am dealing with to generate this daily income stream. It's currently at $168,571.79. Let's head over to my Excel spreadsheet where then I am going to talk about my individual trades, how I chose specific strike prices, and then we're going to take a look at the last 63 trading days and see how the progress has been going thus far. So let's head over there. Kicking it off for July 14th, in total, I made about $350 of appreciation and or appreciation gain, and let me dive into it. The first thing I ran when the market opened was a covered call against the 100 shares of Oracle I own. The price I bought them was the $232.50. So ideally, I don't like choosing strike prices below my cost basis. So therefore, I chose a strike price at the $235. When Oracle opened, it was at the $229.30. So I chose a strike price that's about $6 away. I would have captured about $250 of appreciation if this were to get assigned sometime this week. And then I did get about $91 of premium income from that trade. It is currently active. It has not been assigned or it has not expired yet. So $91 for a week, not too bad. So for the SPY, I ran a cash secured put. And if you guys are not familiar with a cash secured put, an investor is going to pay you an upfront premium to offload their shares in the case that the market is going down. The only thing I need to bring as an investor is collateral, and I need to bring enough collateral to buy 100 shares of that underlying at that strike price. So in theory, because I chose a 620 strike price, I need about $62,000 of collateral. So that being said, I chose a strike price at the 620. When the SPY opened, it was at the 623.20. I didn't think it was going to go down that much, and I didn't really want this cash secured put to get assigned. So I think I chose something below a 0.2 or 0.3 delta. If you guys are not familiar with what that is, it's just the likelihood of that option executing. So I think I chose something below that 20 threshold, but bagged $43, expired worthless. Without using my own money, I made an additional $43 by just using collateral money. Moving on to the QQQ, I ran one covered call on the QQQ. I bought these shares at the $553.42 price, and I made about $59 of premium. I chose the $554 strike price. When the market opened, it was at the $553.97, and the market was super red in the morning, at least for the first 15 minutes. So therefore, I chose a strike price that was pretty much at the money. Didn't want to I chose a strike price that was at the money. Just I wouldn't mind offloading shares, but at the same time, I kind of wanted to hold them, and I wanted to choose the balance between premium to then getting the shares assigned away. So I ended up choosing the 554 strike price. Market opened 553.97. Market closed 556.18. So I did get these shares assigned away, which I didn't really want to happen, but end of the day, it is what it is. So I made about $59 of premium, and then I made $58 of appreciation. So that's why you see the number here at the 117. And just as a quick note, for my appreciation money that I make off of selling shares, I don't actually like to reinvest that money. I just like to leave it as buying power in the case that the market's going to go up. I like to leave a little bit of a buffer because the market keeps going up. That means to buy 100 shares, it's going to be a lot more expensive. So I want to be able to then, as the market goes up, be able to buy. And then lastly, I ran a cash secured put on the QQQ, chose a strike price of the 551 when the market opened at the 553.97, chose a cash secured put that had a good amount of premium. I have about $70,000 of cash on hand. So I pretty much chose this, this cash secured put at the money, because I was actually hoping that it would get assigned so that I could then acquire 100 shares so that for tomorrow I'd be able to have 200 shares of QQQ, the 100 shares of Oracle. But it didn't plan out that way. I have now 0 shares of the QQQ, and I only have my Oracle shares. So we'll figure out what we want to do tomorrow morning. I don't know if I just want to off the rip buy 100 shares or just run 2 very aggressive cash secured puts, pretty much at the money, make premium, and then hopefully get them assigned. And then by the next day, I would make a little bit of less money tomorrow. But then by Wednesday, I would have, 200 shares of the QQQ, plus I'd be able to then run cash secured puts. So something to think about. But yeah, guys, end of the day, $350 on a Monday. I can't complain. That's a pretty good number. And that's it's going to keep us on track for maybe a 4-digit week. So let's head over to the other side of the spreadsheet and then talk about the last 63 trading days. All right, you guys know me. This is my favorite part to the videos, is talking about the project's progress. So let's head down to the bottom and start getting into the details. So July 14th, as we mentioned earlier, made $350 of premium, and the account is currently at $168,503.55. Since April 11th, I made $19,519 in appreciation and or premium gain. And if we look at that as a percentage, is about 15.17%. So pretty good. Already outperforming the covered call ETFs after about 3 months. And those guys usually get somewhere between 8 to 12% a year if you're trying to live off of that income. So we're already past that. So that's fantastic. Looking at the trade win percentage, I'm winning 98.41% of my trades. 162 days, lost 1 day, and like I mentioned, we are already at 63 trading days. The average premium I'm making per day is about $309.83. The average weekly premium is about $1,394.23, and the average monthly premium, this is going to stay the same until July is going to conclude, and that's at $5,651.88. Now let's talk about some of the estimates here highlighted in yellow. For 2025, I'm not going to have a full year of running this option strategy. I started this covered call and cash secure put trading back on April 11th, so it's only going to be about 9 months total, but for a 12-month period, I still can come up with some of the estimates based off of my account's performance. And if we look at what this $72,500 number is basically taking the average weekly premium and multiplying it by 52 because there's 52 weeks in a year. So that's what, if I were to start from, January 1st, 2025, this is what theoretically I could have made in a year period. So it's actually pretty good. It has been only about, 62 trading days, and we have been in a bull market since that April timeframe. But, I'm just going to show you guys the numbers as I'm trading and as they're coming either up or down. If you look at that as an average yearly percentage, it's about 50%. And just from what I observed from April 11th, this ranges somewhere between 49 and 60%. So definitely going to outperform the S&P 500. That would be very nice. For this goal, I'm not really going to talk about it because it's when I first started this trading back on April 11th, my account was only at $86,000. I made a little bit of money, threw in a little bit of money, and then now it's at that 168. So this initial goal of trying to get to 29,000 after the end of the year was, we're going to blow this out of the water. We're already at that 19,000. We have 10,000 to go. We are well on track. So why are we doing this in the first place? For some of the people that are new to the channel, I'm just going to go over this, is we need to have a vision of where we're trying to go. Otherwise, we are rudderless, and it's easier to follow a direction when you know where you're going, or at least have an idea where you're going, versus just running around in circles. So this is that direction. So for end of 2025, my end of year account value is going to be $182,000. And after 9 months of full trading, I should theoretically make about $52,980 and pay about $18,500 in taxes. The taxes are going to be a little bit high because I am a high income earner. Therefore, I'm going to get punished for it. And this is just this 2025 number is just an estimate. And so whenever the year concludes, I'm going to sell lock these. And then moving forward, I am then going to continue making estimates for the follow-on years. And these estimates are based off of my Robinhood account's performance. So as these numbers change, these percentages change, so are these numbers. So ideally, I would like to stop working in about 5 years. So let's take a look at what 2030 would look like. I would be making about $275,000 of appreciation and premium, pay about $96,000 in taxes, and the account would be at $735,000. Ideally, I don't think that's going to be a reality because me and my girlfriend are probably going to get married in that time, probably going to have kids, and ideally to have an income stream plus working would be ideal to give them the best opportunity. So I'm thinking maybe 2035. Let's take a look. If everything stays exactly the same, which I mean, it's hard to fathom because these numbers seem a little bit too good to be true, I would be making $1.1 million and my account would be at almost 2.9 million. And I will say this with a caveat. Yes, of course, when I started running these options trading, as covered calls and these cash secured puts, I have been riding a bit of a bull market. But end of the day, even if 10 years from now, this is half of that. Even if 10 years from now, this is 1/3 of that, that's still going to be a significant amount of money. So if 1/3 of $1.1 million is going to be, 300 or $400,000, somewhere between $300, $400,000, or if we look at that as an account value, that'd be almost $1 million. That's still a win in my book, regardless of if it's going to be exactly like what we're forecasting and projecting here. I just want to throw that out. And let's go to the dream scenario. Say I want to continue working and keep reinvesting every single one of my dividends or not dividends, but all of my premium and appreciation. Let's take a look what Fantasyland would look like. So if I continue working all the way up into about 2058, I would be making about $684 million a year, and my account would be at $1.8 billion. Man, that would be fantastic, but I'm a realist. I don't think that's ever going to happen. But yeah, man can dream. Let's head over to what the weekly numbers look like. For anybody that has watched my previous videos, last week we hit that 4-digit club, getting back on track after snapping about a 7-week win streak. But we hit that 1,400 mark, so I was super happy about that last week. For this week, we're already at $350, and we are well on our way towards making that 4-digit club, that $1,000 mark. So I'm pretty excited about that. We just need $650 more and we hit it. I'm pretty sure we can get that this week. For the monthly tracker for July, we're already at $2,563.52. Previous 2 months have been relatively successful because of that bull market. And then April was a bit of a learning curve for me. I made a couple of mistakes running options. Basically didn't understand how to roll an option correctly. And sometimes you have to learn by losing money, but it's okay. But as you guys saw, winning after I made that loss on April 22nd, I have not had a losing trade since then. So if we see, April 22nd, lost about $1,700. And this green represents wins all the way until where we're at today, July 14th. So that's exactly what we want to see. We don't want to lose. We want to be making safe covered calls and cash secured puts so that we don't actually lose money. You should, if you're running cash secured puts or covered calls and you're losing money with this strategy, you're doing something wrong and you need to reevaluate what you're doing here. And then as I mentioned for the yearly tracker, we've already talked about this number. For 2025, we're already at $19,519.15. So that, guys, that wraps up the last 63 trading days. I think everything is going fantastic and as it should. Let's just head over to Robinhood and start talking about what I plan on doing for tomorrow. All right, guys, now that we are back at Robinhood, let's take a look at what I'm dealing with. So account, yep, like we mentioned, 168,000. But let's look at our buying power. So for my buying power, I have about $550,000 available. So what does that actually mean? So I have about $131,000 of cash. If I wanted to use margin, I can do 131 of cash plus additional 418,000. And then I could only run about $158,000 worth of cash secured put. So that's what this event contracts is. So ideally, I would like to use all of my cash, either owning 100 shares of QQQ or SPY. And then once I have all my shares and all of my cash used up, then I would like to run cash secured puts just using margin collateral. So that's that's what my strategy is. And that's how I squeeze additional money every single day. Just look at what the QQQ options are looking like. So we're going to head to QQQ, trade QQQ options. So I don't own any shares of QQQ right now, so I cannot do a covered call, but I can do a cash secured put. So let's take a look. So because my QQQ got assigned at the 554, I'm debating the idea of just running 2 cash secured puts at this 554 number so that I can potentially buy back in at a decent cost. However, some of these premiums are a little bit nicer, so maybe let's take a look at what the 554 delta is. At the 554, there's about a 32% chance of this executing. I think the 554 is a pretty good number for QQQ, so I definitely have this strike price on my radar. We'll see what the market looks like at open, but ideally I like to trade somewhere between the 0.2 or 0.3. But because I don't have any shares, I'd be willing to choose a delta that's higher. So let's take a look at what this 555 is. A nice 0.40. So there's a 40% chance of this executing. I'd be making $142. So if I ran 2 cash secured puts tomorrow at this 555, I'd make $284. That's almost my daily average just right off the bat. So that would be a pretty good number. So I think for tomorrow, depending on what the market looks like, I'd probably do this 555 at this 142 mark. Because I don't own a shares, I can't run covered calls. So that's pretty much what I might do for tomorrow. It might be a lighter type of day where I only make whatever the cash secured put premium is. If the market is looking good and there might be some sort of discount and the QQQ pulls back, I might just buy 100 shares off the rip and then still run this cash secured put so that I could squeeze out a little bit more money. But that's just food for thought. I don't need to be too greedy. I've had a pretty good Monday and just gotta make sure I maintain that momentum. But yeah, guys, let's stay locked in. Let's stay disciplined. Let's stay harvesting. Matt out. I will see you in the next video.